Right, I think we're ready to roll. This is the last session for today, and you've got to hold out for this session if you're going to get the drinks afterwards, okay? No drinks for naughty people, is what we're saying. But you wouldn't want to not listen to this session because we've got the most fantastic panel today. So, excluding that definition, my name is Julia Graham. I'm the CEO at Airmic. But actually, the people you're really here to see and listen to today is our wonderful panel, who I'm going to introduce in a moment. Just a few housekeeping details. I've been watching intently all day, so I picked up some lessons. We're going to have a number of questions that we're going to pose to the panel, but you are very welcome to ask questions from the floor. If you do want to ask a question, can you put your hand up and a roving mic will miraculously appear, and can you wait for it to appear before you ask the question, and then our panel can hear it, because otherwise you get me repeating it and I might get it wrong. So we're going to have an informal session today. You can ask those questions. Our panel will ask where they feel they can. There are some sensitivities on subjects that you might expect, and I'm sure that you will respect our panel if they can't answer everything that you would like to throw at them today. So our subject for the closing panel is the future of captive insurance. So what a perfect subject to end a wonderful day on. So we're going to go through that route, and at the very end, please don't rush off, because I'd like Richard to come back onto the podium and thank everybody for the day, let you know what the final arrangements for the day are, and I'm going to say a few housekeeping details before he does that. Does that sound like a plan? Good. We've got a plan. We've got a very good panel, I know that much. So what I'm going to do, I'm going to ask each member of the panel to introduce themselves, and when they've done that, I'm going to go and take that mysterious empty seat there and act as host, and we'll take it from there. So over to you, and we'll start off with yourself, Barry.
Thanks, Julia. Hi, I'm Barry Beard. So I'm now in the insurance for 25 years, which I know you probably don't believe that. It's flown. I've been 18 years now with Chubb. All of those years involved to some degree, shape or form with captives. So from a credit management background, looking at credit risk to captives, but for the last 4 years, structuring captive programs for our clients across Europe.
Hi everyone, Kieran Healy, Director of Client Solutions for Aon's captive team, primarily looking at the EMEA region. So essentially I work in captive advisory, so if clients don't have captives, help them figure out whether they should or not, and if they do, help them optimise how they're run. Been working in captives for probably somewhere between 15 and 20 years. So started off working for a captive, self-managed captive in Dublin, and then obviously worked with Willis Towers Watson in a similar role for a number of years. I've been with Aon now doing this role for about 3 years.
Okay. So I'm Elke Valkenende. I work for AIG, and I'm the Global Head of Multinational. So that means I look after all the multinational programs and also all the captive fronting. Background, I've been a client, a broker, an underwriter, and so now I manage all the complex risks.
Thank you very much. So as you can see, we've got a fantastic panel with us today. So I'm sort of going to hone in on the broker first. Sorry about that, Kieran. We always pick on the broker. Is that okay?
That's fine, yeah.
And I'm going to ask you a question all about risk. So, I mean, I was going to say in the past 2 years, organisations have changed. I think in the past 2 weeks, it might be more appropriate to say that organisations have changed. But, the world is seeming to speed up on turbulence. There are more bigger events happening. And I think in a turbulent world, with things like also ESG still playing a key part as well, it might not be the Alison Quinn Niven answer to the question that you've got 47 solutions that you use your captive for. But what role do you think captives in this turbulent world are prepared and able to take on?
Yeah, that's a great opening question. I think about the future of captive insurance in the context of that. So risk registered organisations evolving massively, and there's a lot of partially insurable or uninsurable risks coming into the kind of top risks within organisations' risk registers. So there's a lot of kind of documentation around that. And I think if you look at the survey that we've done, for example, the insurable part of the top 50, 60 risks facing organisations are actually uninsurable. So the minority are insurable, the majority are either partially insurable or uninsurable. So when you put that in context of the hard market, then the insurable piece is getting more expensive. So obviously a captive is extremely relevant in that. But if we think a bit more broadly and strategically, I think to maintain relevance and actually to kind of address the key risks organisations have, I think captives are going to have to naturally start moving into the partially insurable, or dare I say it, the uninsurable space. And I think, think about the key risks, a lot of it is going to centre around supply chain, digitisation and sustainability. And I think a large proportion of those kind of three categories of risk are uninsurable or partially insurable. So if risk managers don't have a captive or some sort of tool to finance these risks, obviously that's a problem. And so what we're working with a lot of clients at the minute is how can we use the captive to sort of test how uninsurable those risks are? Or is it that it's just you can't get insurance for it, but that it is insurable? And by that I mean, is there a way we can start putting underwriting methodologies around some of these risks that there isn't a commercial insurance product for at the minute? So you think about, ESG, sustainability, climate change. There's a huge amount of work being done on that at the minute. And I think the interesting thing about a lot of these risks is that they're influenced by other risks and they cause other risks. So if you have an ESG type risk, that obviously triggers a lot of reputational risk. So there's a lot of interconnectivity between a lot of these new emerging forms of volatility, and I think a captive is obviously a great tool to be able to kind of use both, incubate the risk, collect data, but also to start to finance it in a bit of a smarter way than just leaving it on your balance sheet. And I think if we do that as captive kind of community, it's obviously going to pose a few challenges. So a lot of these risks, we don't have historical data. So the traditional kind of actuarial approach to modelling the risk is going to have to be different. We're going to have maybe scenario-based analysis for how we put the underwriting structures around these risks. And then obviously we have regulators and tax authorities and the other stakeholders that we sort of have to bring along in that journey. But I think it's incumbent upon us to sort of drive that. And I think there is definitely a legitimate place for captives to play a role in that. And I think rather than that being a sort of speculative statement, I think we're already seeing some captives doing that. So that's very encouraging. I think that's probably going to dictate a lot of the future of captives.
So a bit of a renaissance then for captives. And sort of picking up a similar thing, Barry, I'm going to turn to you and say, well, in that context, seems to me, I often use the expression that technical risk professionals can sit in the prop box at the back of the stage and somebody goes and walks to it and takes the lid off when the board have got a technical question to ask, and the risk manager gets out the box and they answer the question and then they go and get back in again. But it seems to me, in the context that Kieran was describing, that this is moving the risk professional much more towards the front of stage, and also the captive with them much more to becoming a board level issue. Do you see a role for captives having that type of influence and perhaps even going to the fundamentals of making organisations more resilient? I mean, how do you see that?
Yeah, absolutely. And I think it's fair to say, other than the market hardening that's been occurring now, and obviously with the pandemic, impact as well, that's also driven that we were seeing the visibility, I think, of captive managers at a board level already. I think as the market started to harden a bit, it wasn't just the price play. And I know in this morning's session that I sat in, we're very conscious as insurers that, risk managers and the people that buy insurance within our insured organisations have got budgets to manage year on year. But we're already seeing lots of clients look to emerging risks from a couple of years ago or more, such as cyber, terrorism, strikes, riots, civil commotion, environmental impairment. And some of those were first-time buyers for those organisations. So we were seeing to varying degrees that the risk managers were getting a focus at the board level, but not always. So I think that's now, that's gone to a different level with the last couple of years. So I think a lot of risk managers are definitely, were becoming more relevant and more visible. And that's, I can only see, going from strength to strength, which I think is a really good thing. The use of captives, I don't think it should be a hard market play. There's some commentary around that. If you've been involved with captives for a longer period of time, there's some fantastic, tools that a captive provides in terms of, risk management, visibility across multinational organisations, ways to kind of provide a corporate level of self-insured retention with a captive that you can't always do at a local level. You can smooth the underwriting cycle though for a hard market cycle and a soft market cycle, because you can take more risk into the captive during a hard market. So you kind of have the insurance excess markets attaching higher and less money exiting the door. But then when, the soft market cycle comes, there's the ability to rein that back in a bit. And I think one of the panelists this morning said that, don't forget that if you are taking more risk into a captive, you are taking more risk of paying claims. So there is that financial aspect to consider on the long term. But I think, the data you can collect centrally for multinational organisations as well, that gives you the strength to model risk and understand it. It comes with captives. And it should be a long-term play, which means that the risk manager function is front and central.
So it might even allow you to insure people flying kites off the bows of Atlantic-going vessels, which I think is what Google were talking about. That conjures up an imaginative scenario for the insurance industry to cope with. I bet you haven't. Glad that you haven't got that one. But Elke, it isn't new for captives to write third-party risks or more consumer-type insurances. But is this something sort of in line with what Kieran and Barry are saying? Is this something you're also seeing a change or an increase in?
Yeah, absolutely. And I think what I've heard a lot today is that diversification of risk, right? So that is for a lot of captive owners really a topical issue that they've got to deal with. But first of all, I would say whether you should take third-party risks in your captive or not is a question of philosophy, right? So most captives will still sort of have a rule where they say, look, we only really want to insure our own parent or subsidiary risks, and that's totally fine. However, there is a growing proportion of captive owners who take third-party risks. And I think there was a survey a couple of years ago where I think it was nearly going up to 20%. And that's definitely an area that we see a lot of growth. So, why would you do that? Well, maybe a little bit contrary to what the previous sort of experienced captive panel was saying, some people do look to make additional revenue from a captive, right? I mean, if your philosophy is break even, that's great. But there's a lot of captive that see the opportunity to just generate additional revenue. Is that diversification of risk that we talked about, right? So if you're taking on big risk, nat cat risks, all these kind of things, some more of the consumer risks may really go in a different cycle and may actually just help you with that diversification. And then there's another element, which is learning something about your customers or driving customer behavior. So especially if you think, for instance, about warranty insurance, right? So there's a significant growth that we have definitely seen in that area. And that could be because you're extending warranty for goods that maybe you produce or that you are in that supply chain. Or maybe there's something about, obviously the typical one would be electronic goods, right? So it'd be coverage for theft or loss of electronic goods. But really, what we're seeing is that typically these classes of business have very or moderate loss ratios, right? So they have other issues, but they do have lower loss ratios. So that could be a really good incentive to do that. And the other thing we've seen is sometimes our clients combine that with services. So I'll give you an example. If you're a producer of air conditioning machines, and maybe you want to provide extended warranty, but also then control the servicing of those goods that you produce, right? So it's sometimes also a way to protect your brand and protect what you're doing. It's not for everyone, but we definitely see a growing trend there in captive owners taking those risks.
And going out to our audience, I mean, does this resonate with you, what our panel is saying today? Do you have any comments or questions that you want to ask in this context? Happy we move on? You're all looking terribly serious. I guess it's quite late into the day and they're daydreaming about those drinks at the end, I think. You know.
If I may, I might jump in just to build on that point, because as well as just, I suppose, driving revenue, I think what we're seeing as well is a sort of, I suppose, a social aspect to third-party risk. So we're seeing more organisations now looking at micro-insurance, so third-party, but can we do it to, well, protect the supply chain, but ultimately for the social agenda, the ESG agenda. So we're seeing, and I think we're seeing this across lots of different risk types like employee benefits and even IP, that the ESG agenda is starting to come in and tilt a little bit how companies are starting to think about the captive. And an example is there's a manufacturer that we're working with at the minute, and they have a warranty scheme, kind of as you described, but what they're doing is they're giving preferential sort of ESG underwriting treatment to the eco products. So it's driving consumer behaviour into what they want them to do from an eco perspective. And I think that sustainability piece is now being overlaid onto how companies are starting to think about the captive and risk. So I think that's an interesting development as well. So we're seeing a bit of a different tone. Maybe before the organisations weren't too interested in third party, and now we're seeing a slightly different softening of that stance because they see the potential for social good coming out of it too.
So Kieran, does that include things like energy transition risks as well?
Yeah, well, I think the energy transition is a really interesting topic, particularly in the context of captives, because clearly the renewables and the kind of move to renewables, there's limited capacity out there at the minute. It's finite, so captives obviously have to play a part in being able to kind of help finance those risks as we move into the transition. But I think there's also probably a part, well, we still need the traditional forms of energy. We're not ready to kind of switch off the kind of carbon heavy energy sources yet. And I think obviously with the geopolitical situation we're in now, it's kind of been very much focused on. So I think as we see more problems with carbon-based energy getting insured, I think we're seeing captives kind of fit into that space. So there's definitely a big part the captive can play in how organisations make that energy transition. And then, like, interestingly as well, what we're seeing is, you know, things like IP is getting impacted, things that you wouldn't necessarily think about. So as organisations are trying to get more sustainable, a lot of their R&D is going into that area, which is changing their IP portfolio, which again is changing their risk portfolio. And again, how can we use a captive potentially to play a part in that? So it's a case of looking at it a little bit holistically. And I think what we're starting to see is that the traditional ways of thinking about like the total cost of risk, we're now starting to see almost like a total cost of responsible insurance getting overlaid on that. It's no longer about how do we get, you know, the best deal in terms of insurance or financing. It's also about how do we ethically do it, how do we do it in a way that actually helps us do that energy transition piece. So it's very interesting, and I think when we think about the future of captives and the title of this panel, there's a massive amount of opportunity there for organisations to start, I think about a captive in a different way, and then start bringing it into, in partnership with insurers, how can we kind of make that in a sustainable way, not to use that as a pun, but how can the captive be part of the way that insurance is sustainable in terms of meeting ESG needs? So I think, you know, there's a huge amount in there, and just in dealing with risk managers over the last 18 months, there's a definite shift in focus, and that's probably now as important, if not more important, than cost and, you know, the actual capacity. It's how do we do this in a way that our stakeholders are, you know, going to agree with it, and that we're actually, you know, driving the sustainability agenda from a corporate level.
Thanks, Kieran. And let's continue on that theme. I'm going to go back to Elke actually and say, well, how does energy transition impact a captive? And Kieran mentioned the role of insurers. What do you think they need from their insurance partners to get them through that process?
Yeah, I fully agree with what you just said, Kieran. And I think, look, the question was already raised this morning. I think it was you, Matthew, who sort of said something about ESG, right? But the philosophy of a captive has to be aligned with what your company's philosophy is, right? I think it starts there. And if you think that a captive is really a risk management vehicle, it kind of would be, I think it would be very difficult to disconnect the captive from your ESG strategy going forward, if you think about it. So what can we really do? I mean, you've mentioned a couple of things already around, I think data is huge, right? So the captive can generate data. So, you can do that in partnership with your insurer to really help answer some of those ESG reporting questions, right? So that's a huge area. But then I think you mentioned the word innovation, and especially when you think about a transition. Transition is hugely important. You can't just switch off tomorrow, but those companies that are really serious about transition, they will also need a lot of innovation from their insurers to really help them, right? So I'll give you an example. If you were an oil and gas company and traditionally you were building refineries, and you put that through your captive, if you're now switching to renewable projects, you'll find that that's a very different kettle of fish, right? The projects are different in value. You may have set up another company, you may have done an incubator, you may have worked with another sort of startup or something. So that's completely different. The values are different. The speed with which these projects are going to come up is very different. So when you apply your traditional underwriting that you would have done for the big construction risks, that is just not going to work in this case. So I think it's long-term partnerships again. So it's finding, those insurers that have worked with you for years to help you make that transition. I think that's really key. There is no quick answers, and I think, in captive space, there is nothing that you can sort of dip in and out quickly, I think. I think most of it is a long-term relationship and a long-term partnership here, really. And whether it's a hard market or a soft market, I think that's got less to do with it, to be honest. I think it's more that journey, right?
Well, I think if you read some of the articles that have been in some of the national press as well, they could almost be too a reversion back to coal. And I was reading, I think it was a Times article last week that said who would have thought we might be having that conversation as little as a month ago. So you have to remain agile, and I guess your captive could be positioned to help you do that as well. Any comments or questions? You're looking terribly intent. So I'm going to pick on Barry in that case. And Barry, I'm going to come back to, today we've talked throughout the day about the future, and we're just crystallising and bringing a few issues together here in this panel. But how do you see the future role of fronters? Will they need to also be more flexible and more open to fronting lines that they might traditionally not have fronted before, for example?
It's a good question, and it's something I think that we've had that at the back of our mind for some time. We're not insurance companies without customers, number one, right? So, we have to evolve to the needs and risks as they arise. And if there's partially insurable risks or emergent risks where you don't maybe have the data to analyse that yet, then we recognise that we have to be there, because some businesses can't go about their business without underlying insurance. So they do need solutions, and one of those is fronting. So I'm sure as Elke would say, we do a lot of captive fronting. It's very much part of what we do as an insurance company, and we have done for many years, and we do see more opportunities. We can't ignore the fact that in a hard market, captives will evolve to say we want to take more risk, and it's a way to kind of smooth that underwriting cycle for them, and we have to accept that and work with them. And I think it comes back to what Elke was saying about this becomes a collaboration. Client by client, we have a conversation with them and with the broker and with the underwriters line by line. And we have to, you know, work on a strategy that's not just the next year. It's like, how do we see this playing out? People are looking for longevity of relationships. We love that. We know that a lot of clients and brokers, you know, obviously love that. But you can't get complacent. You have to think about, you know, long-term sustainability of pricing, which, you know, we obviously want to be involved in that conversation. But it's, you know, we can't stand by and say, no, we can't front. You know, I think it can be a challenge if you're on an early journey with a client where you may get requests to front some risks that are uninsurable, or you know, you can't price them in the insurance market. If the first point of a relationship is kind of a big fronting deal with a lot of exposure, it's more difficult for a fronting company to say, okay, let's start the journey here. But if you can have a good conversation around, you know, what else can we build this relationship up with you guys? You know, we don't always think it's a good idea for a captive to take, you know, big limits in exposure itself. It has to think about the net position and a more sustainable level of risk that it would retain itself. So we still think we've got a part to play there, but that means maybe that you have to take out, you know, some of the risks that are uninsurable, and you front those, and you have an element of the risk that you do, you know, have some retention on as well. So there's no simple structure anymore. You get real kind of hybrid structures where you're kind of ventilating the higher layers on some of the uninsurable aspects. But it's all about flexibility, right? We know we can't take a firm stance. We do front lots of risks that we would say, yeah, there's no price for that. We have to be able to underwrite that though as well. We have to understand the risk because we're using our license to provide the insurance that is then fronted to a reinsurance captive. But you know, we have to evolve. I think we're very conscious of that, and always open to discussions.
If I may just
I was going
add
to say,
to
do you
that.
want to chip in there?
Absolutely. And I think, you know, one thing I would say, absolutely agree with that, but especially if you're looking at it from a multinational perspective, right? So quite a lot of the global risk, you do need to produce paper locally, right? Regulators ask that more and more, and that is really complex. So the complexity there, I've seen really increase a lot. So what local regulators want, you know, if you just think about the wordings that need filings and all that sort of stuff, it's not the most popular subject, right? Like nobody really wants to spend their time looking at local policy wordings and filings and you know, sanctions checks, so to just sort of name a few things. But they make our world hugely complex, right? They really add an enormous amount of workload and complexity. So we have to balance that against, we want to provide flexibility, we want to ensure the risks of the future. But it's got to be doable, and especially when you got to, if you think, for instance, about, you know, I'll just name a country, China, and we need to file the local wording everywhere. We need to have a product, and we need to be able to do that. And I think sometimes that part of the business gets underestimated, and that is probably the most complex issue that we're sort of facing. Is that entire admin that sits behind that.
Thank you. So I'm going to, yeah, I'm going to come back to you while we're doing the question. I want you to think about one final takeaway that you would like to leave with our audience today. But while you're thinking about that, we have a question. Did we see? Could you wait for the? Do you mind if just wait for the mic, and then we can hear you beautifully. Then, thank you.
So my name's David Lanfranchi. I work for a marketing company. I'm also Deputy President of the London Business Interruption Association. So, look, policies and policy wording, Elke, are we getting to the stage where actually we need to follow Alison's view and go back to simple exposures and look for coverage for those? Seems to me, and we spent a lot of time working through BI wordings, seems to me that the biggest challenge for the London market is to stop tripping up the inventiveness of captives and other areas by resting on old wordings. which, when you feed those through the whole process, make innovation next to impossible.
I agree with you to some extent, but I think we have a lot of regulators, right? And you know, and as you mentioned, we obviously have to follow that, because one of the reasons why our clients come to use a fronter is because they want a compliant program, right? And you want to make sure that if you have a claim in a certain jurisdiction, that we can also do the claims handling. And that's a really important part that we may have not talked about a lot, but claims handling is super important. So the reason why you have the local policies is typically because you want to be able to react locally. So we are, to some extent, restricted in what we can do, and I hear your frustration, but that is quite often regulatory driven.
Yeah, I mean, if I can just add in there as well, I mean,
the wording's wrong, the requirements of local policies, what I guess is outside your control. Structure, the nature of the policies is well within your control as insurance.
yeah, I mean, the filed wordings is one thing, right? So it's, I think everyone probably understands that everything has to get passed by a local regulator. So if you've got a new wording, you have to file that. You've got to get ahead of a renewal or an inception date to get that wording ready for that date. What we do see though sometimes is that sometimes the wordings or the cover requests, they don't always match the local regulatory environment either. So, but you've got to go line by line then, right, when you get to this detail. I mean, environmental impairment is a good example where some of the rules and regulations have changed very differently around the world in different countries. And, a good local standard or best local standard policy in those countries is probably, we would very much recommend that, because if you try to adjust to something that maybe looks more like exposure that you want to cover on a master, it may not give you the claims solution. It may be more ambiguity and more difficulty in handling and settling that claim locally if you didn't go with the best local standards. So I think I understand the frustration and the question, but I think you really, at that point, you need to get into what is the deal, what is the cover, what is the client's business. But one of the challenges it does bring, I think, for everyone in that process, just the insured, the broker, and the insurer, is there's a lot of time could be spent on this as well if you're working towards this. So if you've got lead time, it's good, but it does take up a lot of everyone's time. So maybe it's something you evolve to. You start off with more best local standard, and then you get to know and evolve in the coming renewals.
David, do you want to add to that?
I kind of sort of hear what you're saying, but I think going back to Alison's point that she would like cover for injury to people. Yes, we have to understand we have a workers' comp, we have EL, we have regulation, but actually, we don't need PA, travel, PL, whatever it might be. We can, or loss of assets. You need to simplify the risks that businesses are facing. And if it's an ESG type risk, you need to be very clear about what it might be, and then use the captive to drive the definition of risk and take that to the market and say, look, this is what we are insuring in our captive. We need you to do that. Now, you're not going to do that for me because our business is a small business. We turn over, whatever, 400 million a year. But if Google do it, you might listen. And that has to drive change in the market, because otherwise we don't produce new solutions. We have new ideas, but they don't feed through the system.
I guess one of the challenges, David, is that there is still probably too many examples of silos in the industry as well. So PA sits in one place,
Absolutely.
PL sits in another, health and benefits sits somewhere else.
Absolutely, and cyber was an exercise in bringing various bits from various silos together, and then that becomes more difficult. But yes, it's breaking up those silos to address the risks that businesses face, because they're not, as you point out, all insurable. In fact, relatively few of them are.
I think the good news from an AMIC position is we are seeing more evidence of that happening. It might be slow, but it's definitely happening.
Okay.
But I can see, have you got, you okay? But you were holding a microphone just now, Richard. You got rid of it. Okay. I'm going to bring this session to a close. I'm going to say one thing first before I do. We've just issued our annual survey. And for those of you who are AMIC members, if you want other issues addressed on the subject of captives, what we should be doing by way of professional development to make sure that you are fit to stand at the front of that stage, as many of our, I'm sure, already are, do fill that in and tell us what you think, because that helps us to understand the DNA of who you are, what you do, and what you want from us. I would endorse the Aon survey. It's one of my favourites. I'm not on commission, by the way, but I like the way that you can go into regional and sector manipulation of the data, which I think is quite good. So I'm going to go start with Barry, and I'm going to ask you one pearl of wisdom that you would like to leave with our audience today.
Pearl of wisdom. You phrased it differently earlier, so.
You can answer either.
I think the takeaway for me is, look, I don't think as insurers we can't fix every solution overnight, but what we need to do is listen. Okay, so that's what we're here for. It's very difficult to answer some of these questions in a big room, which I'm sure you appreciate, but those are the sort of conversations we're more than happy to take into a room with a broker and a client when we understand the business. But yeah, if we don't listen, we're not relevant.
Well, if that's not a pearl of wisdom, I don't know what is.
Okay.
That's a great
Well, I
piece
winged
of
that
advice.
well then, didn't I?
You did wing it well. Elke.
Yeah, I would say there's actually a lot of opportunity out there for the captives, right? So have that conversation with us, because we may not be able to do everything, but there's a lot that's possible. So there's a lot of opportunities and possibilities, I think.
Thank you. And Kieran, I'm going to give you the broker's view as the final view.
Thank you. I guess my takeaway, or pearl of wisdom, if you want to call it that, would be that I'm seeing a lot more bravery amongst captive owners recently. I think that's really healthy. And I think we need to, just build on the point we were talking about earlier, we can use the captive as a way to drive some of the change that we need to see. As we said, the risk register is changing to the extent where insurability is being diminished. So I think the captive is, in conjunction with insurers, but let's use the captive as the petri dish or the incubator to start using to prove the underwriting concept. Then working with insurers, let's onboard them so we create the market. I think that's the key thing we need to do. If we just accept that the traditional market is what it is, well then the captive relevance will also diminish with that. And I think the captive is a great way to start doing that. And that sounds a little bit aspirational. It is aspirational, and like anything that's innovative, it doesn't come without a bit of challenge, like all innovation. But like really heartened to see in different parts throughout the continent that there's companies doing things that are quite, well, I'd say genuinely innovative. Things around ESG in particular. There's a lot of very interesting things happening that I think 5-10 years ago people wouldn't have thought would happen, that regulators would put roadblocks up or that tax authorities wouldn't accept. Now we're seeing that that's not the case. Regulators need to get on board with the sustainability agenda, for example. So I think if we're brave in how we think about the captive and start collaborating and using the captive as a hub for innovation, we can bring insurers along and create markets. And I think that's the key thing that we need to start doing.
Thank you. And I think during the pandemic particularly, there's been huge progress in innovation. Let's hope everyone keeps their foot on the accelerator pedal of innovation and we don't take the foot off the pedal as maybe the market starts to be a little bit softer. So I'm going to bring the panel to a close. I've got a couple of house notices to share with you before Richard sends out some final thanks for today. The first one is 6th of April. We're running a breakfast session with Herbert Smith, looking at the legal and insurance issues associated with the conflict in Ukraine. So look out for that. We'll be issuing invitations for that tomorrow. We're also running an event, our first event in the Republic of Ireland, the Island of Ireland Conference, I have to call it. But we'll be in Dublin on the 25th of October. If you would like to come along to that event, or you've got colleagues in Dublin that you would like to come along to that event, again, watch out for adverts about that. We've booked a venue. We're in the centre of the city, really easily accessible venue, and we hope to see a number of you or a number of your colleagues come to that. And the last house notice, before Richard really starts to drag us off the stage, is that, you know, we are serious about these events, and we plan to run another event like this next year. So this is not a passing interest. We're here to stay on this subject. And I think this is such an important issue, as today's turnout has shown, which I think has been awesome. And although, as he can't thank himself, I'm going to thank Richard for pulling today together. You've done a fantastic job, Richard, as always. And I'd like to thank you personally for doing such a great job in designing today and bringing this group of speakers and our audience together. But very importantly, before I hand over to Richard, I've got to thank the panel. Thank you, Elke, Kieran and Barry, and I'd like to thank you in the usual way.
Yeah, thank you to the panel, thank you Julia as well for kind words, and I'd just like to say thank you to everyone here, and thank you to AIRMIC actually, because I've run similar events to this in the previous job, and I've never got anywhere near this kind of delegation, not just the size of people in the London market and further afield interested in captives, but also the mixture of experiences we've got in the room, you know, captive owners and those who are curious to learn more, and I think it's really healthy for our industry. I loved Kieran's last thought about kind of seeing more brave captive owners. I think I've never thought of describing it that way, but I think that's really apt because I think we are seeing more bravery in how companies use their captives, or companies setting up captives for the first time. So I'll stop speaking because there is a bar to get to. So we have drinks here from now until 5:30, and SRS are very kindly putting on further drinks as well from 5:30 at 1 under Lime, and everyone, absolutely everyone here is welcome to attend that. So I'll certainly be there for a few more because it has been a long day and a long few months setting this up. And thank you to our partners, all of our AIRMIC partners who partner with us on everything, but particularly to We Are Guernsey, Guernsey International Insurance Association, who sponsored our breakfast and the drinks we're about to go to now, and to Willis Towers Watson, and to AXA XL, who also sponsored the lunch and would have sponsored the networking break. So thank you to AIRMIC, thank you to everyone, and we'll see you at the bar. Thank you.
Thank you to
And thank you to Lloyds, of course, as well. Thank you to Lloyds.